All right, we're going to go ahead and get started with today's class. What we're going to be doing in today's class is I am basically going to be just going over Chapter 3, Case 1, and how to do Chapter 3, Case 1. Your Chapter 3, Case 2 is very, very similar to Case 1. So all the steps that I'll be going through to complete Case 1 are the same steps you're going to do for Case 2. Okay. Now I am using the assignment, the PDF assignment that's in your Blackboard. We'll go into there really quickly. So when you come into your Blackboard and you click on Lessons, you'll go to your Learning Module 1, and you click down here, and you'll go into your assignment folder. And right here, you can click on this, and it'll open up as a PDF. Okay. You can also go into directly your textbook. Is Case 1 at the end of Chapter 3 is Case 1 in your textbook as well. So you can access it either way, but I'm using it here, so I wanted to show you how to access it here. Of course, now, a lot of you, if it comes to your Company A and your Company B for Case 1 and Case 2, okay? I know some of you reached out to me and said, oh, the questions were kind of different when I was setting up my company than when you set up your company. I don't know what questions are different. I mean, when I set up both my companies, it was pretty much the same questions that I clicked on in the video that I sent out. And please look, I'm gonna go back into Blackboard. I don't know if you go into announcements right here and you scroll down, right here is the latest video that I just did. All right, so if you're watching maybe an old YouTube video, and maybe that's why it looks different. But go into class announcements and click on the video right here. I just did this video, last week. So hopefully, maybe that's why some of you said it looks different. Maybe you're watching an old video. I try to delete all the old videos out of Blackboard so we wouldn't have that issue. And if I missed one, I apologize. So hopefully, this one will be more accurate to what it currently looks like. So like I said, go into Blackboard, click on announcements, and you'll see this this video right here, this YouTube video that I just did last week. So this video should hopefully be the more up-to-date version if maybe I missed one and didn't delete an old video. What I mean by like the old videos is QuickBooks is online, is constantly updating and changing. So some of their screens look different. Some of their prompt questions are different. So I try to go through this every semester to make sure what you guys are experiencing and what I'm recording match, just because of those constant updates with QuickBooks. So I try to delete all the old videos and only upload the latest, greatest. So what you guys are seeing when you log in and what I'm showing you on my videos are up to date. So those of you who may have been like, oh, I tried to set up my company, it looked different, the questions were different, maybe you're watching an old video. So again, go to your announcements in Blackboard, scroll down to the announcement I sent out on January 10th and watch that YouTube video, and maybe that will help. All right, so you're going to want to set up Company A and Company B, because we're going to be doing 2 cases every learning module. So all of the Case 1 assignments you'll use for Company A. So you'll see here, when you get the invite, it says Company A Case 1. And I showed you in the video that you're going to rename it to your first name, last name, Case 1. Now, if you put last name, comma, first name, or it doesn't matter. I don't care about that. That's not. But I just want to make sure you have the Case 1 in the name so we don't get confused. And we make sure that we use only the company Case 1 for all of our Case 1s, because they're a continuation of each other. They're a continuation. So at the end of every chapter, you're building a company. So we're actually building 2 companies because I want everybody to get as much practice using QuickBooks as possible. So I have you actually create 2 companies. So Company A, Company B. So Company A will use only Case 1 because, like I said, it's a continuation, it builds. And Company B will use for all Case 2s. All right. So I do like having your name in the company name for my purposes because it makes grading a lot easier. Um, but just make sure you have case one in the name and then case two in the name so that it helps you also keep track. Now, I'm an instructor, so I can't click on this drop down menu, but some of you may or may not have this drop down menu at the top. If you do have this drop down menu, I'm hoping it's because then you can switch between your case one and case two company without having to log out and log in and then log out and then log in. If that is not an option for you, and I'm sorry if it's not, it should be. It should be. But if it is not, and I apologize if it's not, make sure because I know you can't use the same email address. So I'm sure most of you used your student email for company A and then maybe used a personal email for company B. You'll just want to make sure that you keep track of it so that if you have to log out and log in for each company, you remember your email and password for each company. If you are naughty like me, and I am very naughty because I am old and I have a horrible memory, I use the same password. Yeah, I know. I use the same password and just different emails. Yeah. But that's I can't remember things. Yeah, don't judge me too harshly. I know a lot of you people, especially if any of you guys are really familiar with, sorry, I don't want to click on that right now. Really familiar with security profile and don't ever reuse the same password. Yeah, I'm so guilty of that. So don't judge too harshly, please. All right, so I normally in my classes, okay, we will start out going through the textbook and using test drive mode. And I talk you through what we're learning in that chapter, going through all the steps in the book, talking about what we're doing, relating it to accounting. And I'm going to relate it to the accounting stuff that we learned in Financial Accounting 1. Okay. So in future lectures, we will start out in our textbook and in test drive mode. And we will go through what we're doing and why we're doing it and the purpose of what we're doing. And I will always tie it back into what we did in Financial Accounting 1. Because to me, it's not just a matter of learning what to click in QuickBooks. It's about learning why we're doing it. How does it affect the financials? Okay, and so I'm going to tie it back to what you learned in Financial Accounting 1 and possibly Financial Accounting 2. But most of what we're going to do in QuickBooks will tie back into what we learned in Financial Accounting 1, which is why I believe is a prereq for computerized accounting. You have to take Financial Accounting 1 before you can take computerized accounting, and that is why. You need to learn the basis of what is financial accounting so that when we go into computerized accounting, you can take what you learned and apply it. And that's what we're doing here. We're taking what we learned in Financial Accounting 1 and we're applying it. All right. Just like you would be if you were an accountant working for a company using accounting software. Now, I will also say this. Not every business is going to use QuickBooks. Now, QuickBooks is the most widely used accounting software, especially for small businesses. It is the most widely used. Which is why in computerized accounting, we focus with QuickBooks. There is also a QuickBooks certification you can take once you complete this course. It's not done through Southern Crescent, and it's done through Intuit, but I can maybe try and help you with getting a QuickBooks certification while completing your accounting degree with Southern Crescent. I can definitely help you with that. So I've worked for a lot of different organizations, and the majority of the organizations I have worked for have been government organizations, and we have used many different types of accounting software. So I've used a lot of different accounting softwares throughout my 20 plus years of accounting experience. And I will say that the majority of them are set up very similar. So when you master one, it's not going to be hard to master another. All right. How it's set up over here, there's going to be a lot of similarities. How it's set up over here, a lot of accounting software groups certain things into certain categories. They group them into expenses, they group them into revenue, they group them into payroll. So it's not uncommon when you go into and use any accounting software that you see that accounting software grouped like that. It's going to be all based on what type of transaction are you doing. Are you recording an expense? Are you recording revenue? Are you recording payroll? So most accounting softwares that I've used are lumped like that, just like here in QuickBooks, whether it's on a side menu here, or whether the whole screen itself is just a bunch of apps you can click on to take you into that module within the accounting software. So I have learned that once you master one type of accounting software, if you go into a business that uses a different type of accounting software, 9 times out of 10, you're going to be able to pick up on it and learn it a lot faster, because you're going to start seeing the similarities in all the different types of accounting software. That's been my experience, and believe me, I started like 20 plus years ago where the accounting software was a DOS system, which means the black screen and the green writing, and you had to type in commands to go into those quote unquote modules. So I went from that completely unuser friendly to a much more user-friendly that's very similar to what we're looking at on the screen right now. Like I said, I've learned several different accounting softwares throughout my career because not every company uses the same. And I will say that right now, the majority of the accounting software that is used by pretty much every company across the nation uses an internet-based accounting software that you can log into anywhere. So QuickBooks Online, the financial software, the accounting software that's used by the college, which is called TeamWorks Financial, ran by PeopleSoft/Oracle. It's gone through a lot of name changes over the years. Started as Oracle, it became PeopleSoft. Now it's called TeamWorks Financials. It's all the same thing. It's just been going through name changes. It's also internet-based, which means you can log on to it remotely. So with that said, what is the most popular form of work nowadays? Remote work, which is another reason why accounting software now is basically internet-based. So you can log into it remotely if you need to. So those future accountants taking this class, that word remote, just keep that in your head, because that's where a lot of the accounting positions are going nowadays. All right, I'll get off that little soapbox. Let's go ahead and get started and really kind of start doing the steps. Now, like I said, I'm only going to do Chapter 3, Case 1. I want you guys to try and do Chapter 3, Case 2 on your own. Like I said, they're almost identical. Subtle differences, almost identical. So if you follow along with me doing Chapter 3, Case 1, and you're able to do Chapter 3, Case 1, following along with me, because you will have to still submit both of them as part of your assignment. I'm just going to do Chapter 3, Case 1 with you. I want you to do Chapter 3, Case 2 by yourself. Hopefully, this video will help you understand what you're doing and why. In this particular video, I'm not going to be doing the textbook and the test drive mode. I am working remotely today. I only have one computer, and yes, I'm a bit spoiled. I can admit that I'm spoiled because when I'm in my office, I have two monitors that I can have all this information up all at once and show you my screen while having everything else pulled up on the other screen that I need, my class notes, etc. I'm having to literally borrow my daughter's Chromebook to be able to have two screens right now to teach you guys. So it's really hard for me to be able to do the test drive mode in the textbook. But I think in this chapter, it's okay to skip it. Most of what we're going to be doing here is just setting up our companies. So there's really not a lot that I feel like I can cover in test drive mode to help us understand what we're doing and why without being, and that I can't do now, just going through the case with you. So just let you know, I'm going to skip that. But in our future videos, when I'm back in my office, I will be able to, we will do test drive mode. We will talk about what's going on, why we're doing what we're going to be doing, what this means to our companies, how it's going to affect our companies, and I'm going to tie everything back to Financial Accounting 1 that you should have already taken before taking this course. What else do I want to talk about? Because I'm working remotely. Okay, let's talk about that really quickly. I will be sending out another announcement to everyone today. If you guys are without power, struggling to have good internet, I know. The reason I'm working remotely is our Griffin campus has no power still. They're working diligently on it. They're very convinced they're going to have everything up and running and ready for us to return to work tomorrow. But if you guys are dealing with hard times, number one, I'm extending due dates. I do not want anybody having any kind of stress trying to get their assignments turned in if you have no power. So please email me. Let me know if you don't have any power, if you are dealing with internet outages, because I know what's going on in Griffin right now is not just a matter of a couple of down power lines. It's the entire hub infrastructure. So we do not know how long it's going to take for the city of Griffin to be able to repair the hub infrastructure and get everybody's power up and running. I know they're working like my husband works for Service Electric, so I know they're working overtime and trying to get everything done. So I want you to know that I'm aware of what's going on. I'm totally sympathetic to your situation. If you need extra time because you're dealing with a number of things caused by Thursday's storm, do not hesitate to reach out to me. Do not hesitate to let me know what's going on. I will be posting internets for links if anybody who needs any kind of help. Southern Crescent is here for you. We are 100%. We're in it with you. We are in it with you. So I will be posting some emails about that today. And again, let me know if you're having issues. And, if your only form of communication right now is your phone because nothing else is working in your house, send me a quick email from your phone if you can. And I will make note of it, and no worries about due dates. Okay, not until we get this fixed. All right. So let's go ahead and get started, and let's do this first case, because I know a lot of you have tried this. You've attempted to get started on your own, and you're just like, I'm lost. I don't know what to do. I'm stuck as I don't know how to do this, and that's okay. That's totally okay. That's why we're going to do this. And we're going to do this every learning module. So I'm not going to leave you guys hanging. I'm going to do this every learning module. The whole point of this is to show you how to do it and then give you the opportunity to do it on your own. So we're going to do that. We're going to do the case 1 together every learning module. And then you're going to do case 2 on your own every learning module. All right. So that's how we're going to do this. So don't stress out. Some of you already emailed me really stressed out because you're like, I don't understand this. And that's okay. That's okay. That's what I'm here for. So without any more stalling, let's get started. So when you log in, you're automatically going to see your dashboard. This is going to be the first thing you see. Remember, you're going to do, you can have one company for case 1 and one company for case 2. Most of you should be able to click on this drop-down menu to switch between your 2 companies. Like I said, I'm an instructor, so when I click on this, I'm going to pull up everybody's, and I don't think everybody wants to see that, so I'm not going to do that. If you don't have this drop-down menu, and I'm sorry if you don't, because again, QuickBooks is forever changing, and so sometimes what I see is not what you see, because I am an instructor, so forgive me for that, but my understanding is you should be able to switch between them. If not, then you come over here, and then you just click sign out, and then you sign into your other company. So again, remember which email you used for which case and which password for which email. Okay? So hopefully you guys wrote all that down. Again, you'll go into Blackboard. You'll go into your lessons, and we are working in a learning module 1. All right? We are working on our chapters 2 and 3. So what we're going to be doing today is we're going to actually be setting up our company. So you can either go into your textbook, which I have a link for right here, to pull up your chapter 3, case 1 and 2, or you can open up your assignment folder, and I have them in a PDF that you can use to download, print, whatever is works best for you, for the steps for completing case 1 and case 2. All right, so let's go back into QuickBooks and let's get started. The first thing it wants us to do is it says your company is a distributor of surfboards. You're located in La Jolla, California. The company does not collect sales tax as all of its customers are resellers. Leave industry text box blank. You begin business in 2023 and want to use QuickBooks starting January 1st, 2024. Now we're using future dates for a number of reasons, but it helps us using future dates because I want you to get in the habit of typing in the date. A lot of times it's going to default to what your current date is. All right, so we use future dates in our cases, right, to get you in the habit of typing in the date of everything that we're doing. All right, it's to get you in the habit of typing in that date. So we use future dates for two reasons. One, to get you in the habit of typing in the date, and two, if you forget to type in the date and it defaults to the current date, it's easy to find that error and fix it. All right, so we have to make changes to our company, and it's going to be you are to make the following changes to your company that we created in chapter 1. So we skipped chapter 1 in the textbook. We didn't really do chapter 1 in the textbook. I didn't even assign you to read chapter 1 in the textbook because I had you set up the company using my video. We didn't need the textbook. In fact, the textbook's not going to be accurate to setting up the company, which is why I posted a video in the announcements of the video setting up your company. So we just skipped chapter 1 altogether because it's not going to be match what you see now. Okay, so in other words, QuickBooks has updated and the textbook has not. So yay. All right. So what it wants us to do is it wants us to modify our settings. So how are we going to modify our company settings, is we're going to come up here to this gear icon right here at the top right of your screen. All right, so you will click on this gear icon and you'll see a lot of options pop up. Okay, I want you to go over to where it says you're on your company, and I want you to click on account and settings. All right, so this is how we're going to modify our settings. So the first thing we want to do is make sure that we click on company, and so all the information here for company. All right, this is where if you did not change your company name when you set up your company, you can do so now. So if it still says company A case 1 here, you can change it. You'll come over here and you will click on this icon right here, and it will allow you to change your company name. Okay, it'll allow you to change your company name. Do not worry about changing anything. I do not want your social security number, and I do not want your employee ID number. So this right now needs to be left blank. Please do not provide that information. If you were going live and you were actually working, you would want to use you're the employee ID number or social security number if you were, if it's your business, okay? But we're not doing that here, so please leave that blank. All right, and then once you have changed your name, you would hit save. All right, next thing under company is tax. So you should have, when you set up your company, you should have selected it to be a corporation. All right, and this is very important because we are going to talk about stock and dividends later on in this semester. So to be able to utilize the accounts for stock and dividends, we have to set our company up as a corporation of one or more shareholders, Form 1120. So you want to make sure this is selected. If it is not, go ahead and click on the little pencil icon, click on the drop-down menu, select corporations, and then click Save. All right. That is all the things we're going to change. Now, of course, I'm using an old email that's not even active right now. Do not worry. Okay. No matter what email you use, I mean, you can even use a made-up email. It doesn't even have to be a real email. The only thing that's going to mess up and you can change it now. If you want to change this to your student email, you can. It's not going to affect anything. It's not going to change anything. All right. The email is just to set up your account, and email is really used more like a username. Nothing is going to actually be emailed to you. Okay. No. The only email that Intuit has to actually email you information is your student ID, your student email, your student email. All right. So, I mean, even if you used a bogus made up email, it's totally fine. All right. So that is it under company. So we're going to come down here. All right. And the next thing it wants to do is click on sales. So let's click on sales. All right. And the only thing it wants us to do is it wants us to turn on the ability to track inventory quantity on hand. Okay, so this automatically shows item tables on expenses and purchase forms. So you want to be able to track your quantity on hand. So mine is already turned on, but if yours is not, let's say your toggle was off, okay? All right, you would just click the toggle and it says you're about to turn on inventory tracking in QuickBooks. All right, so this is interesting. All right, so this is where we're going to tie back to Financial Accounting 1. It uses FIFO. All right, it automatically uses FIFO as this inventory costing method. So turning this on will affect your books. If you're unsure, we recommend you try it. So we're going to turn it on, and the accounting method, the inventory accounting method automatically used is FIFO, which is your first in, first out. All right, you click continue, and then you're going to click save. Now that's the only modification it wants us to do under sales. Everything else is going to be left as default. All right, now it's important to have your inventory, tracking your inventory on hand is important. When we go in to start making purchase orders and sales invoices, and we're selling our inventory or we're purchasing our inventory, tracking it by turning this toggle on to track it, we're able to see live within the sales invoice and within the purchase order how much of that particular item in inventory we have on hand at that moment. So it's just a really, really great tool. So we want to turn it on so we can utilize that tool and see how, you know, it can help us when we're making sales. And like if you're doing a sale, all right, and you sold this item, it'll immediately tell you how many you have left on hand to know if you need to turn around after this sale and do an order to restock your inventory. All right. Next thing it wants us to click on, it wants us to come over here and click on expenses. All right, so it wants us to do a number of things under expenses. All right, it wants us to track expenses and items by customer. So track expenses and items by customer, so I'll need to turn that on. All right. It also wants to make expenses and items billable. So make expenses and items billable. So we'll turn that on. All right. Now, no, it says no markup, so we're not going to click on the markup. It says track billable expenses and items as income in a single account. So we are going to track billable expenses items as income, and we're going to do it in a single account. We're not going to, no sales tax charges, so we're not going to do that. And then the default bill payment terms, we're going to select net 30. Okay. And we do want to turn on the use purchase orders. So that's already turned on, so we have to click on that. All right. So, but we want to make sure that the use purchase orders option is turned on. Once we confirm all that is done, we can click save. We don't need to click on payments, no chart changes at that time. So let's go ahead and click on time. Now I know in the textbook it says click on advance. All right. But to do time tracking, we need to click on time. All right. It wants us to make sure that we add a service field to, so we want to allow time to be billable. That's turned on. And we want to be able to show service field to timesheets. All right. So both of those are already turned on. All right. And under advanced, there is no changes. So the change we're going to do for advanced is going to actually be under time. Okay. All right. All right. So that is it for company settings, modifying company settings. All right. So now we're ready to go to step 2. Step 2 says create new accounts and related beginning balances as follows. All right. So we're going to have to go to our chart of accounts. There's 2 ways that you can go to your chart of accounts. You can come up here to the gear icon. All right. And you can come over here under your company and click chart of accounts. Or you can come down here to the accounting and click chart of accounts. All right. So you will have a list of accounts that are already in there by default. All right. They are in there by type. All right. Type would be if it's an asset, if it's a liability, if it's an equity, if it's an expense, or if it's an income account. Okay, those are the major types of accounts. So they're going to be listed by type. All right. So normally what we will do is we will start by seeing if there's an account already set up. So the only bank type, so we go under type and it says the first one wants us to do is create a bank account with the detail type of checking. All right, we only have one bank account type, and it's a cash on hand. So we don't have one that exists. If we don't have one that exists, we're going to come over here and click on the create new. So we want to create a new account, so we're going to click on the green new button. All right. So a pretty little window is going to come up. All right. So this up here would be your account type. These little picture icons up here is your account type. All right, so the first one it wants us to do is create an account type for banks. So we're going to click on the bank icon. I'm going to come over here to the first drop down and select bank account. And we want to select checking, and we're going to name it checking. Okay. So you have to start out by clicking on one of these icons. What does it fall under? It falls under banks. It's a bank account that we're creating. All right. It's the detail type is checking, and we're going to name it checking. All right. Now, let's scroll down. We want a starting date and we do want an opening balance. All right. It tells us that we want a starting date of December 31st, 2023. So we're going to select other date. And that's going to allow us to type in the date. All right. And now we're going to type in the balance, and the balance is $25,000. Okay. So now we can see under it's going to show us, this is going to show up on our balance sheet. It's going to show up our balance sheet under bank accounts, checking with a balance of $25,000. All right, so we're going to go ahead and click save. And let's see what happens over here. Now we have this new account, all right, with a balance on our chart of accounts. So the next thing it wants us to do is it wants us to create a fixed asset account with a detail type of furniture and fixtures. So we can look to see if we have any fixed accounts that's got furniture and fixtures. So we do have this one that says furniture and fixtures, fixed asset. All right. So we don't need to create a new one, but we want to change the name. We want to change the name. So we're going to come over here and we're going to click edit. Okay. So it's an asset. See, so that icon's already clicked. It's an asset. It's a fixed asset. It's a furniture and fixtures. All right. So what I want you to do over here is put original cost. Do a better job spelling than me. I'm a horrible speller. All right. Go ahead and we can just delete this description. It's not necessary. All right. So like I said, we want to check to see if we already have an account set up. We don't have to always create a new one. All right. So not everything is going to be a new account hitting the green button. We can actually find if there's an existing account and just edit it. So we also want to do a start date. So we're going to select other. It's going to be, again, December 31st, 2023. And the balance is going to be $40,000. Now we can click save. So we want to make sure, let's put it down here. Again, this is going to show up on your balance sheet, all right, because it's an asset. So it's going to show you right here. This is what it's going to look like on your balance sheet. All right. So we can scroll down here. And we now see that we have a furniture and fixture asset for $40,000. Now, the next one it wants us to do is it wants us to track the depreciation of it. Okay, it wants us to track the depreciation. So we do not, I can tell you right now, we don't have an account set up for depreciation. All right, so we are going to have to create a new one, this one. So let's go ahead and click new. All right, so it's an asset, so let's click the asset. All right, so let's scroll down. And let's look for fixed assets. All right. All right, so I'm having an issue. There we go. All right, so this is going to be a little different because we want it to be a depreciation account. So we are going to select the cumulative depreciation account. What I want you to name it is I want you to name it furniture and fixtures. Okay, I want you to name it that. I'll show you in a minute. Now, it's a fixed asset. It's specifically an accumulated depreciation account. So hopefully if I did everything correctly. So we see here, it automatically lumps these two together, okay? It automatically lumps these two together. So we'll go ahead and we'll select another start date. Here, it wants us to start with a balance of $10,000. Now, if we did everything right, we'll see what it looks like. All right. So we'll go down here. So by selecting accumulated depreciation for the detail type, all right, it's going to automatically know that this is a contra asset account. All right, again, by selecting detail type accumulative depreciation, all right, then you're telling QuickBooks that this is a contra asset account. You don't have to enter a negative. It's going to automatically show it with a negative. All right, negative indicating it's a credit, indicating that it's meant to offset the balance of the original cost. Okay, so we should have two accounts for furniture and fixture, one for original account, cost and one for depreciation. And that's what it's going to look like on your balance sheet. And that's why I wanted you to make sure you put those two names out beside it. I know it says just name it original cost and name it or depreciation, but I want it to show up on the balance sheet that says furniture and fixture, original cost, furniture and fixture, depreciation. All right. The next thing it wants us to do is it wants us to put in a long-term liability. So let's go down here and let's look for any long-term liabilities. So we have 3 long-term liability accounts already set up. One for business loans, one for business loan shareholders, and one for mortgages. All right, so we do not have a long-term liability set up for notes payable. Okay, so that means we do need to create a new account. So we'll scroll back up here to the top and we'll click new. All right, now we're going to click liability icon because that's what we're doing. We're creating a liability. Remember what liabilities are. Liabilities are debts, money that we owe. All right, and we are creating a note payable, and it's a long-term liability. Now, what is there between a current liability and a long-term liability? All right, a current liability is a liability that's expected to be paid within 12 months. Long-term liability is anything that's expected to be paid outside of 12 months. So it's in other words, it's going to take more than 12 months to pay off that debt. All right, so we're creating a long-term liability. We're going to name it notes payable. And this is a debt that our company probably is going to take more than 12 months to pay off, which is why we're going to do that. So we're going to select, scroll down and we're going to look for long-term liabilities right here. And we want to select notes payable. And we're going to go ahead and name it notes payable. Now, a lot of you be like, well, why are we naming? I mean, why can't I just be like, why do we have to name it? Well, I mean, if you have more than one notes payable to more than one lender, you may want to put that lender's name here. So you would put like notes payable dash and then the lender's name if you have more than one. Even if you only have one, you may still want to be able to put that lender's name in there so that you can have it tied directly linked to it. There are ways that we can load vendors and load customers within QuickBooks. And so if we have a payable and that we're loading, that we're creating, we can tie it directly to a vendor. All right. Or if we have a receivable that we're entering, we can link it directly to a customer. And that way we can track and it actually creates subledgers based on those vendors and customers. But here, what we're doing is we don't have that lender slash vendor already in our system. What we're doing is we're just trying to get these balances on our books right now, because what we're doing is we've already kind of been operating, we've already been kind of running a business. And so what we're taking is what our current balances are and the current accounts we have, and we're putting them on our chart of accounts, and we're kind of setting up accounts and creating balances that those accounts as of real time. So that's kind of what we're doing here. Just kind of explain what we're doing and why. So what we're basically saying is I'm starting this company out with a debt. I'm starting this company out with a debt. And you don't necessarily have that lenders or that vendor or in the system yet, but you want to go ahead and get that debt on the books. So we're doing it this way. There are other ways to do it, but this is the way we're doing it because I want you to know that this is an option. So we're doing it this way because this is an option. There are other ways of doing it, obviously, but this is an option. And we will actually have an entire chapter devoted to payables. We'll have a whole entire chapter devoted to receivables, to where I'll show you alternate ways. Alternate ways. All right. So we're going to go ahead and click on this again. Same old here. Nothing new. All right. So the balance for this one is $60,000. All right, so let's look at how it's going to look on the balance sheet. So right here, it's going to show up under the balance sheet, under long-term liabilities, notes payable, with a balance of $60,000. And it's important to check this. It's important to check this to make sure that you clicked on everything correctly and it looks good, it looks right to you. Once you does, you just go ahead and click Save. All right. Now we have one last account, and this is our common stock account. So remember where I told you it's very important that you select corporation, because we are going to be dealing with common stock and dividends in this semester for your companies. All right, so now we're going to scroll down past all of our asset accounts, past all of our liabilities accounts, and now we're going into our equity account. So you see here we have several equity accounts. Now look at that. We already have an equity account for common stock. So we don't need to create a new one. So what we do over here is we click on our drop-down menu and we click Edit. All right. So equity is already selected. Our drop-down menu is already selected. Our detail type is already selected, and our name is already entered. We just delete out this description. It's not necessary. All right, so now we're going to go ahead and click on Start Date. Click Other Date. Enter the month, day, year, and the balance, and that's $1,000. All right, let's go down here, and we'll see that it is under equity, common stock, $1,000. All right, so we have set up our current balances into our chart of accounts. All right, so we created some new accounts, we edited some existing accounts, and we've updated all of our balances as of December 31st, 2023, which is 123123. And that's going to actually happen this year, guys. December 31st, 2023, 123123. It's kind of cool. All right. Sorry, I love numbers. Obviously, I'm an accountant. I love numbers. It's an illness, and I refuse to seek help because I love numbers. All right. Let's move on to step 3 because I'm getting silly now. All right, now it wants us to create some new products. All right, so how do we create new products? All right, so let's go back up here to our gear icon. All right, let's go over here to where it says lists, and let's go down, let's click on products and services. Now there's another way you can access it. You can come over here to sales and click products and services. All right, it's going to take us to the same place. Now, so what do we want to do? We want to start adding some items. So let's go and click on and add an item. And it should not be taking us there. What is this new window that's popped up? I want to make sure why it popped a new window up. That's just odd to me. I'm going to make sure that I'm not doing something. All right, no, we're fine. Don't know why it opened up a new window. That kind of threw me off for a minute. All right, so I'll go back here. I'm going to add a new item. It's popping up a new window again. That's just weird. I don't know why it's doing that. If it does that to you guys, I'm sorry. So I'm going back to my original window. I don't know why it's popping up a new one. That's really weird. but we want to add a product or service. All right, so this is what it should look like. So if it pops up in a new window like this, just close it out. Just close out the second window, come back to the original window. All right, this, again, QuickBooks Online. Sometimes it's crazy and I never know what it's doing. So we want to be able to add a new product or service. All right, so if we're looking back at our case 1 steps, it wants us to add a product. All right, so adding a product means we're going to increase our inventory. So these are products that we buy and or sell and that we will track quantities of. All right, so we're going to select inventory. All right, now the first thing it asks us is name. The name is Rook 15. All right, we're not going to worry about a SKU, we're not going to worry about a category, but we are going to come down here to inventory on hand. Now notice, we're only going to fill out information that has a little asterisk. And of course, the asterisk means this is required information. So we are really just kind of putting in limited information here. We're only putting in what's kind of required. All right, so that's fine. So the inventory that we have on hand is 10 as of December 31st, 2023. All right. Now let's scroll down a little bit. All right. Now we want to make sure we select the inventory asset account is selected here. So this should not be changed. If it is anything different, please change it to inventory asset. So we do need to come down here to sell price. The sell price is $650. And we want to change this account to sales. Not sales of product, but just sales. So now, QuickBooks uses the word income. In financial accounting, we use the term revenue. All right, so QuickBooks is using income as in place of revenue. So when they say income, they do mean revenue accounts. So we learned in financial accounting 1 that when you sell products, the revenue account we use is called sales. All right, they're calling it an income account, but income and revenue here are synonymous. They mean the same thing. QuickBooks uses the word income instead of revenue. And I'm assuming that they chose the word income instead of revenue because it meant to be user-friendly for non-accounting people as well. And so most non-accounting people are more familiar with the word income versus the word revenue, but we are accountants, our future accountants, and we know the word revenue, and we know what it means. So to make sure you understand that QuickBooks is using the word income, but it means the same as revenue in our financial accounting terms. All right, the next thing it has us to enter for this inventory item is this cost. And then we're going to enter the cost is $400, and we want to make sure the expense account we use is cost of goods sold. So we remember that. We remember when we learned about merchandising business, all right, that when you sell products, the revenue account we use is called sales. And so because remember, it's a service industry, it's service fees. When it's a merchandising industry, it's sales. But an additional expense account we have to keep track of is costs of those goods sold, because we want to be able to calculate what? Gross profit. Gross profit is sales less your cost of goods sold, and that is your gross profit. And gross profit means your profit before your operating expenses are taken out. All right, so that's exactly what we're doing here. So once that's done, we can click Save and Close. All right, so now our screen has changed. We now have a list of inventory items, and we have one inventory item called a Rook 15 with a total on hand of 10, sales price of $650, and the cost of $400. All right, now we have a second item, so we are going to add a new item. So let's click on the green new button, and it is a product. So we're going to click on inventory, and we're going to name it the Water Hog. All right, let's get down here to quantity on hand. We have 8 as of December 31st, 2023. All right, so let's scroll back down. All right, so we make sure inventory asset is selected. Let's go down here to sales price. It tells us our price is $860. We want to change this to sales. We come over here to cost. Cost is $500. And we want to make sure we use the cost of goods expense account. Click Save and Close. All right, so we should have 2 items now. All right. Now notice up here, it shows if we have anything low in stock or out of stock. So that's actually really cool because then you can go into your products and services and immediately see what is out of stock or what you need to buy more of. All right, so let's go. We're still under step 3, creating new products and services. And now we want to create a service. So we're going to click New again. But this time we're going to come down here to Service, and we're going to select Service. All right, so the name of the service is going to be Consulting. And the rate of our consulting, so our sales slash rate is 25. All right, but it's not going to go under sales. It's going to go under service. All right, so if we look under our income accounts, okay, here's all of our income accounts. We don't have one for service fees, do we? So we're going to have to create one. Okay, so we may have to go all the way up to the top where it says plus add new. So there are 2 ways to add new accounts. One is the way we did before when we went to our chart of accounts and we added new, all right? Or like right now, we're in the middle of adding a service consulting fee, and we want to charge it to our service fee income account. Well, that account's not been set up. So this is an alternate way of setting up the account. So the account type is income. So we want to click over here. It says service slash fee income. And we're going to name it services. I'm going to click Save and Close. Now, this does not give us the option of setting it up with a current balance and an as of date as the other one did. So that is the difference, but that's okay. This is just a different alternate way of setting up a new account. So it's going to look a little different. All right, sorry, a little distracted with my phone. All right, so we want to, let's make sure we did everything right. We have, it's a new service. It's called Consulting. It has a rate of 25. The income account we're going to use is Services. All right, so we had to click the Add New at the top. The account type was income. The detail type was service slash fee income, and we named it Services. All right, so when that's all said and done, we can click Save and Close. All right, so we can see here we have our consulting, which is a service. We have our Rook 15 and our Waterhog, which are both inventory. All right, so now we want to make changes to the following accounts via a journal entry. All right, so we're still doing step 3. We're now on step 3. We're on C of step 3. Make changes to the following accounts via a journal entry. So how do we do a journal entry? Where do we go to do a journal entry? All right, we're going to come over here to this plus new button and click plus new. We're going to use this plus new button a lot. We're going to use this plus new button when we create invoices, when we create purchase orders, when we create bills, when we pay bills, when we record invoices as paid, etc. The plus new button is going to be used a lot. This is going to be your main go-to place when entering certain types of business transactions. So one of the business transactions we're going to enter today is a journal entry. So we're going to come over here under Other, and we're going to select journal entry. Now I want you to notice something under customers. All right, we have it kind of set up under customers, vendors, employees, and then other. So under customers is where you have all the invoices and the sales receipts, the ability to receive payment, make a refund, etc., or credit memo. Okay, all of that's linked under customers. So these will be all normal transactions you would create for customers. all right, for your customers. Then we have a section for vendors. All right, this is everything that you would do for a vendor. You would create an expense for that vendor, write a check to that vendor, record a bill, pay the bill, create a purchase order for that vendor. So all the things you would normally do with a vendor, you see under here. So what we're working on today is journal entry, and journal entry is under other. All right. So it's not directly linked to a customer. It's not directly linked to a vendor. It's an so what we can. I'll show you what we can do still when it comes to customers and vendors, what we can do. But let's go ahead and select journal entry. We can still link it to customers and vendors via journal entry, and I'll show you how. All right, so the first thing I want us to do is we're going to change the date. All right, so the date is to be December 31st. So we're going to change it December 31st, 2023. All right, so I told you everything is a future date because I want us to really make sure we get used to entering dates in when we do any type of business transaction. Dates are very important. So, and we use future dates so that in case you forget to and it defaulted to a different date, it's easier to find. All right. All right, so it's the journal date should be December 31st, 2023, and we do want it to be journal entry number 1. All right. So the first thing we're going to do is it says it wants us to create an entry to accounts receivable. So we're going to come over here, and when we click on the cell, we see a drop-down menu pop up. So we click on the drop-down menu, and right here at the top, we have an AP and an AR. So we don't have to set it up. That's good. So we want to click on our accounts receivable AR. Now, it doesn't tell you under amount if it's a debit or a credit, does it? It just tells you what amount, because you're supposed to remember the rules of debits and credits from Financial Accounting 1. An accounts receivable is an asset. Assets are recorded with debits. In other words, a debit increases assets, right? Debits are the natural balance of an asset. Debits are what's used to increase the balance of that asset. So we know if we're setting up accounts receivable that we're going to enter it as a debit. All right. So I'm going to come over here and enter 5,000 under debit. It doesn't provide us with a description, but under name, we want to link it to a customer. So I told you that when we did that notes payable, the way we set up the notes payable initially, there was no way to really link it to a vendor or a customer. All right, but I did tell you that later on, I will show you that there are ways to create receivables and payables and link them to customers and vendors. All right, so we want to link this receivable to a specific customer. Now, this customer is not in our system yet, because if it was, when we clicked on the name button, we would see it as a list, so listed under this, so it doesn't. So we are going to have to create new. So we're going to click Add New, and it tells us that it's a new customer, and the name of that customer is going to be Blondie's Boards. So we're going to name Blondie's Boards. Okay. So that's the only information that's given us is just the name. So we have nothing else to put in for this particular customer. We know it is a customer. We have the contact type as customer. So we didn't have to change that. And we just have the name. So that's all we can enter at this point. So we're going to go ahead and click Blondie's Boards. Type in the name Blondie's Boards. Make sure the contact type is customer. And we're going to click Save. So now we have Blondie's Boards. All right, so that accounts receivable is now linked to the customer, Blondie's Boards. So that is a very important step, and we do not want you to skip that step. Okay. All right, so the next line it wants us to enter on the journal entry is it wants us to enter a prepaid expense on the books. Now, remember, prepaid expenses are considered assets. So just like with accounts receivable, prepaid expenses are assets, and assets are recorded with debits. All right, so we're going to go ahead and look for prepaid expense. So you can scroll down and look for prepaid expenses. Or you can start by typing in the name. All right, so here it is under current assets, under other current assets, so prepaid expense. Now, QuickBooks is always going to try and keep your debits and credits balanced. So you see here on my screen, when I clicked on prepaid expense, it automatically wanted to fill in the credit side because it's trying to keep the debits and credits balanced. And it's just something that a feature built into QuickBooks. Not every accounting software does that. It is a feature built into QuickBooks. So you just delete it out of the credit side because we know we're going to record this as a debit. And the amount it wants us to enter is $3,000. All right, we're not going to link that to anything specific. So we're not going to click on anything else. So far we've recorded accounts receivable. We linked it to our customer, Blondie's Boards. We've recorded a prepaid expense. So next we're going to do accounts payable. Well, what is a payable? A payable is a liability. What do we use to record liabilities? What is the normal balance of a liability? All right, they are credits. All right, credits. So again, in the instructions, it doesn't tell you. It doesn't tell you if to record it as a debit or credit. It just tells you the amount. You're supposed to know from what you learned in Financial Accounting 1 that a receivable is an asset, and assets are recorded with debits. Same with prepaid expense. It's an asset. It's recorded with a debit. Accounts payable is a liability, and liabilities are recorded with credits. All right. So let's click on our drop-down menu. Accounts payable is right there at the top. All right. It again, it's going to autofill that amount in because QuickBooks is trying to make sure you keep your debits and credits balanced. All right. So we just take that out. We come over to the credit side, and it tells us to enter $4,500. Hold one moment. I'm so sorry. All right, sorry, I didn't make that communication. Now, with just like with accounts receivable, I apologize for that interruption. Let's get back and started. So, just like with accounts receivable, we link to a customer. When we create accounts payable, we can link it to a vendor. All right, now this feature can be done using the journal entry. It can be done when you create an invoice. It can be done when you create a purchase order. It can be done. You will be able to select customers and vendors. All right. The only time it does not really give you that option is when we're setting up the new account via the chart of accounts. It doesn't really give you that option to link it to a customer or a vendor. Any other time we're setting up an account or creating an account or recording anything to those accounts, we will be able to link it to a customer or vendor. All right. So with that said, I'm going to click on the name. So you see here, there's that customer we entered. All right. But we don't want to link it to a customer. We're going to link it to a vendor. And if you look here, it tells us what vendor is called Channel Islands. So we're going to click the plus new again because we're going to have to create a new vendor. Now it automatically did it to customer. It's not a customer. So when you click on that drop down menu, you have 3 options: customer, vendor, employee. All right. This one, it tells you it's a vendor. So we're going to click on vendor. Now, again, the only information it tells us is the name. So we're just going to enter the name, Channel Islands. All right. So make sure you have the contact type as vendor. You have the name entered, and we're going to click Save. Now, if we look at our journal entry right now, it's not balanced. We have more debits than we have credits. All right. So let's finish reading the instructions under step 3C. It says make changes to the following accounts via journal entry. We're going to title it Journal Entry 1 with the journal date of December 31st, 2023. And it says with an offset to your opening balance equity. Okay. So let's come over here. Let's go into our drop down menu and we want to look for our opening balance equity. So if you notice what I did, you can scroll up and down to look for it, or if you're impatient like I am, and I'm very, very impatient, you can just start typing the beginning name, letters of the name of the account, and if that account exists, if that account is already an available account in your chart of accounts, all right, when you start typing in the name, it'll pop up just like it did right here. All right, now if you start typing in the name, all right, so here is opening balance equity, that's the name. If you start typing it in and nothing pops up, you'll have to click the add new, okay? But everyone says if you selected your business type as corporation, it should be available. You shouldn't have to add new. So we would just click it. And here's where that great feature of QuickBooks wanting to automatically balance your journal entry with debits credits, it automatically uploaded the credit balance that you need to record to your opening balance equity account. Okay. All right. So now your journal entry is balanced. We can go ahead and click save and close. So mine is defaulted to save and new. I don't need to do a second journal entry just yet. All right, so hit that drop down menu and click save and close for now. All right, so you'll get a little icon up here at the top that says journal entry 1 is saved. Good to go. All right, so move on to step 4. It does want us to do a second journal entry, but it wants us to close the opening equity balance account to retained earnings. Well, we kind of need to know what that balance is. All right, we kind of need, so we're going to go to our chart of accounts. And we're going to look for our opening balance equity account. So we're going to scroll down to all of our equity accounts. All right, here's all of our equity accounts. Here's our opening balance equity account. All right, it has a balance of $5,500. All right, first, stop, think. Equity. What is the normal balance for an equity account? All right, let's run through the accounting equation again. You have assets equal liability plus equity. All right, if the normal balance for an asset is a debit, then the normal balance for a liability and an equity is a credit, because your debits have to equal your credits. So again, let me say that one more time. This is Financial Accounting 1, guys. Assets equal liabilities plus equity. Assets carry a normal debit balance. Therefore, liability and equity accounts must carry a normal credit balance, because your debits must equal your credits. So if I'm looking here and I see that my opening balance equity account has a balance of $5,500, I know, because it's an equity account, that that is actually a credit balance. I know it doesn't have a negative in front of it. The only reason that contra asset account, when we did depreciation, has a negative is because it's a contra asset account. All right, that's why it has a negative. All right, it doesn't necessarily mean all credits balances are going to be negatives. That is only showing a negative because it is a contra asset account. That's the only reason it shows a negative. All right, you have to remember the rules of debits and credits to know if the balance of that account is a debit or a credit balance. All right. So if you look up here, my notes payable is a liability account. Liabilities hold a normal balance, a normal credit balance. It doesn't have a negative in the amount, but I know it's a credit balance. So you've got to remember your Financial Accounting 1 rules of debits and credits. You've got to know that. You've got to know that. Let me tell you why. So let's go up here. So we know the balance is $5,500. We have to close the balance out to our retained earnings account. All right, we're closing it out to our retained earnings account. So we're going to come back over here, plus new, go under other, select journal entry. Now look, 2 really great features. It saved the date of the last journal entry, and it automatically went to journal entry number 2. We don't have to do anything there. But you want to make sure it's right, so double check it, but you shouldn't have to change anything there. We're going to immediately come up here. All right, now remember, when we do a journal entry, we always start out with our debits. We always start out with our debits. So, hold on, did I get a question? Yes, I did. You should not have to add AP. You should not have to. If you selected corporation as your company type, you should not have to add AP. But I will go back and kind of walk through how to do it properly. All right. So if you click on the drop-down menu and you do not see accounts payable as an option, like me, if you type in account payable, right? Make sure you put that S on there, accounts payable, okay? And B is better speller than me. I'm a horrible speller. You should be able to start typing in the name and it should pull up. If you selected corporation as your company type, this account should already be in there for you. So you may want to double check your company settings. All right, you may want to double check your company settings. If not, you would just click the add new, just like I'm doing here. All right, so you saw where I clicked the add new. All right, we had a question. One of the students said, hey, I don't have accounts payable. All right, so first I wanted to make sure you were typing in the name for it to pop up. If it doesn't show up at the top of the drop-down menu like it does mine, to make sure you type in accounts with an S, payable. If it still is not showing up on your chart of accounts, all right, here's how you can add it. All right, so you would just click the add new. The account type, all right, is going to be other current liabilities. And you should be able to select accounts payable. So let's see here. Maybe not other. So because accounts payable exists in mine, it's a little different. See, so, but that's how you do it. If you don't have accounts payable, it would be under other current liabilities. You would select accounts payable and you would name it accounts payable. Okay, but it is considered a current liability. So the detail type should be current liability, and then the account type should be accounts payable, and then you would name it accounts payable. All right, but if I'm telling you right now, it should already be an account available to you if you selected corporation as your company type. So you would go back under company settings, you would select on company, and you would make sure that corporation form 1120 is selected, because that does affect what accounts on the chart of accounts is available to you to use. All right, so just that's very important. All right, so let's go back to journal entry number 2. All right, we're on step 4, and wants us to close out the opening equity balance account to retained earnings. So we went back to our chart of accounts. We checked to see what our balance was. Now again, equity has a normal credit balance. If it has a normal credit balance, then to close it out, we're going to debit it, because a debit is going to zero out the balance of that account. So we're going to debit our opening balance equity account for $5,500. Okay. It wants us to close it out and put it to retained earnings. So we're closing it out and moving the balance to our retained earnings account. All right, so we should be able to type in the name, retained earnings. There it is, retained earnings. It's an equity account. We can verify that because it says equity out here. So we click on that. So we're moving it basically from one equity account to another. That's all we're doing in this journal entry. We're moving it from one equity account to another. We want to close out our opening balance equity account, and we want to record it to our retained earnings account. All right, so again, we know equity holds a normal credit balance. So to close it out, we're going to debit our opening balance equity account, and then we're going to credit it to our retained earnings account, which is also an equity account. All right, so once that's done, we can click Save and Close. All right, so the last step that we're going to do is we're going to run a trial balance. Now, remember learning in financial accounting, we do a trial balance. We do a trial balance all the time. Trial balances are really important. It's really is to make sure that all of our accounts are holding the correct balance, that it's holding the correct normal balance, whether it be debit or credit, and it's to make sure that our debits and our credits equal each other. Now, if you look in the PDF for case 1, I show you what the trial balance should look like. All right. So you're going to use that figure 3.15 to make sure you did everything correctly. So how do we run those reports? All right, simple. We're going to come over here to reports and click on reports. So here is all the different types of reports you can run. All of them right down here. All right. I will tell you that a trial balance report is one that you're going to use quite a lot. So I recommend you scroll down, you find the trial balance report, and you put a green star by it. All right. That means it's going to automatically put it at the top of the screen for you, so you don't have to search for it. Another one is going to be the transaction by detail account report. So go ahead and put a green star for that one as well. Let me show you what it does. Scroll all the way to the top. Now it's listed as a favorite, and you don't have to scroll anywhere for it. It's automatically right there at the top for you, and it's easier to find. Another way to do it is to come up here and just type in the name. You start typing in the name. All right, and it'll pull up the trial balance report for you. So let's start by running a trial balance report. All right, so we're going to start by using, hold on. The main thing I want you to do is just modify the dates. So pretty much everything we've done has had just one date. We've not dated anything else, anything other than December 31st, 2023. All right, so if you notice here, it automatically changed it to a custom. All right, so you don't really have to click on the drop-down menu or anything. Just go ahead and start putting in the dates. All right, so I want you to go ahead and do that and just click Run Report. All right, so immediately what you're going to do is you're going to take what you see here on the screen and you can compare it to the PDF for your assignment to make sure all the account balances match. You want to make sure that your account's names are correct. You want to make sure that they're carrying the correct balance type, whether it's a credit or debit. You also want to make sure that it is the correct balance. And then you want to make sure that your debits and your credits match. When you have verified everything looks good, you're ready to export it and upload it as part of your assignment. So how do you do that? You're going to come over here and you're going to click on the drop-down menu for export and you're going to select PDF. Do not send me an Excel. All right. I can tell you right now, for some reason, when you export it as an Excel and you save it and you try to upload it, it never fails. The values on the Excel spreadsheet do not come across and I cannot see your balances. All right. It just gives me a hashtag value. All right. So do not do Excel. Please export it as a PDF. Upload it as for your homework assignment as a PDF. All right. So you'll export this as a PDF. You can save it to your desktop, your C drive, or if you have a flash drive, or if you have an external hard drive. I don't care as long as you can access it to upload it for your homework assignment. That's all that matters to me. So you'll export this as PDF. And then you'll use that PDF that you just exported and you'll upload that as your homework assignment. All right, so let's go back to report listing. All right, the next report I want you to do is a transaction detail by account report. All right, we're going to run this report. And just like we did for the trial balance, we're going to do same here. We've only entered one date. So there's no need to do a date range. Now, as we progress, our date range will change, just FYI. So click Run Report. And what this is a detail list of every transaction you've done. A detail list of every transaction. All right. You will also export this as a PDF and upload it as part of your homework. So export to PDF and you'll upload it for your homework. Now, what does it look like when I say upload it for your homework? Well, let's go back into Blackboard. So you've done all the steps. You've got, you're ready. You're on step 6. All right. You're at the end of it. You've done everything. You have exported your trial balance. You've exported your transaction detail by account report. Now I know on the PDF it says Excel. All right. I know it says Excel. Please don't do Excel. Please do it as PDF. All right. You've exported it. You've saved it to your C drive, your external hard drive, wherever you want to save it, as long as you can access it. All right, you're going to come back in here. All right, and all you have to do is see where my mouse is. Sorry, see where my mouse is. You're going to click on the actual Chapter 3, Case 1. All right, it says using the PDF format. Using the PDF format. So I have instructions in here telling you to make sure you're using the PDF format. You would come over here and you would click Browse Local Files, and you would go to whatever file you've saved it to, whether it's your desktop or it's an external hard drive. All right, you'll find it, you'll select it, you'll click Open or Attach, and it'll attach it here. And you can attach more than one file. And once you've attached both files, you just come over here and click Submit. And that's how you submit your assignments to me. All right. So that is it for today. All right. So do we have any other further questions? All right. So all right. So I will have to look at your account. So I'll look at your account separately and try and see what we can do to fix your balances. All right. You shouldn't have to put any negatives in. Like I said, when you're the software knows what is a normal balance of each type of account, and it's going to load it that way. So when you create a payable and you enter the amount when you created the account using the chart of accounts to create the accounts, it knows to automatically put it as a debit or a credit based on the account type that you selected. So you did not have to do negatives. So I will pull yours up. I may not be able to do it today because, like I said, I'm having to work remotely, but I will look at it and get back to you, and maybe tomorrow when I can actually get into my office and pull everything up to look at your account. Just know I may not be able to get to you today. All right, but I'll look at it. Do we have any other questions? No? Okay. All right. Well, hopefully following the steps to your Case 1 will help. The steps to do everything in Case 2 are the same. It's just the amounts are different. The inventory items you enter are going to have different names. The dates are going to be different. The amounts are going to be different, and the names of your customers and your vendors and your inventory items are going to be different. But the steps, what we click on, how we get there, are the same. They're the exact same. All right, so you can use the instructions in this video for Case 1 to help you solve Case 2. All right. As always, though, if you get stuck, feel free to email me, and I'll do my best to try and help you troubleshoot what may not have gone wrong. All right. Other than that, you guys have a great rest of your week, and I will see you next Tuesday. Oh, I don't like that. Okay, I'll talk to you guys next Tuesday. Bye.